We are live. No countdown today, guys. Sorry about that. But what's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom over there. The stock market is crazy and chaotic. And man, what a day today, Fat Man Zoom. Before we get into it, why don't you head everybody up with the start in five?
Starting five, we have Oliver Thorpe, Savvy Money Show, Oomph 7-6, Jonathan Schreiber, and Zion Khan. You are starting five. Welcome to Own the Chaos. Listen, the market hasn't it didn't crazy pop off, but I have a feeling that our chaos crew actually crushed it today because a lot of tech stocks, speculative stocks, absolutely went off. So, guys, make sure you stick around. We're going to be talking about those stocks. If you haven't been here before, we go live every Monday through Thursday, 3:30 p.m. Eastern time to talk about just that, what's been going on in the market. So welcome to Own the Chaos. We will talk about NIO today, and we'll talk about Chinese stocks as a whole. So, we've been dancing around these for a little bit, so I'm interested in it. How'd you do today overall?
Overall, I did pretty good. I mean, it was up. I was up quite a bit, and then everything kind of settled for me. But it's mainly because of Ford. Looked like Ford had some may have some potential issues. The response I thought was kind of whatever. But on the side of the battery production and some issues over in China, so we'll see what happens there. But I wasn't too worried about it. Everything else was popping off. Disney did extremely well today. Also, my DR Horton, my home builder holdings was just crushing it. Loving that stock right now. But yeah, overall, pretty solid day. I mean, the Santa Claus rally carries on. We're going to see yet another all-time high close for the S&P 500, which would be 72 days for the whole year of all-time highs for S&P.
Wow,
That's crazy.
nuts.
I think it's an average of like once every 4 days we're seeing the S&P hit a new high.
That's awesome.
That's incredible.
It is incredible. Yeah, well, first off, I need to point out this is our official last live stream of 2021.
Yep.
The next time you guys are going to see us is in the new year. Sunday for Stock Watch Sunday, 7:30 p.m. Eastern time. So it's the end of the year. You got one more day if you're going to do any tax loss harvesting. Now's the time. Making those moves, making sure you're on the up and up with all those things. I know there were some questions in the Chaos crew about that, which we can get to that eventually. But since it's also not only the end of the year, but the end of the month, I also like to say you brought up Disney. That was a community buy. We are back officially on track. A green community buy. So What is that, like 4-1 or 5-1? 4-1, I think.
Yeah.
4-1 on the year.
Yeah, either way, a great record.
Yeah, so it's safe to say that it looks like we're going to close out this month green on it. And I think anybody can officially, as of tomorrow, you can sell out of your position if you so choose for the community buy. And then we will next week look at the next community buy. We're going to do them every month next year.
I'm actually holding on to mine.
Good.
So I'm really happy with the way that Disney's been performing, and I'm certainly really nicely in the money on those calls. And those calls don't expire till March, so I'm going to hang on to that a little bit. I don't think that we see Disney below 150, which what the strike price is on those calls. I don't think we see it anywhere near that going into the new year. I think that's one of the stocks that actually outperforms, especially given the way that it ended the year this year. It's going to be red on the year for the Dow. As the Dow component. So I actually am going to hang on to my Disney position, and we'll see what it does going into the new year.
Yeah, absolutely. I am getting out of it just for actually, I need to be honest. I got out of it like 2 days ago. But I only got out of it by accident because I forgot that it was our community buy. So I was up on it. I apologize. I don't know why it slipped my mind that day when I text you, like, what was our community buy again? But yeah, I mean, I still feel good about it. And honestly, it's one of my highest conviction stocks for 2022.
Yeah. I mean, the prime example of a good value stock that you want to be in. They make money. They're going to continue to do well. Jeff Punica just put in the chat there that Disney is one of the higher performers for the month as one of our top stocks to watch for the month too. So nearly 10% gains just in the month of December, which much more in my my call position. So really happy with the way that's been going.
Yeah. So we have a question from Matt Hamilton, which asks, new to the group, what is tax loss harvesting? First off, welcome to the group. Appreciate you joining us. Basically, it's selling investments to either offset your gains or to minimize your tax liability. So forget all those words. Basically, if you're up on a bunch of stocks, if you sold a bunch of stocks at the end of the year, and you're green as far as like what you've sold, not the positions you're still in, but what you've sold. If you've produced a net positive, you're going to have to pay taxes on that if your account is a normal taxable account. What you can do is you can sell some stocks that you're red on and you can offset those gains. So what your broker is going to do is it's going to say, okay, you've sold 12 stocks, your profit of $1,000. Well, if you're red on certain stocks, let's say you're red on 5 positions and it's $1,200, you can sell those stocks. Now you take the $1,200 loss, the 1,000 gain, and it's going to give you a statement that says for the year 2021, you net lost $200. So you can write that against your adjusted gross income. So you can write that to minimize how much taxes you pay. So for the year, and I probably do a video to break this down. We've talked about this before because I probably need to break it down a little slower. But for the year, you can claim up to $3,000 in losses. And in addition, you can actually, if you claim more than that, you can carry that over. So if you claim 5,000 if you closed out 5,000 in losses, you can write off 3,000 this year and carry over the 2,000 next year. So it's a great tax sort of haven to take advantage of. And honestly, it's very underutilized. Now, keep in mind, you can't just sell it and get back into it. If you sell something you're down on and you can't get back into it for 30 days or 31 days, I think it's 30 days. Yeah. So just bear in mind, you can buy something else that's in a different industry, but you can't buy the same thing. That's called the wash rule. It's not, you can't get that loophole.
Yeah.
So basically just, if you're red in something and you're going to show gains, you maybe want to consider selling it. I sold a ton of stuff. I think I was up I didn't even realize it, Brad, but in one account, I was had sold stuff that was in the green 7,000 maybe.
Yeah.
And I didn't even notice. So I was positive 7,000. So I wrote off pretty much all my, or I sold pretty much all my red trades.
Yeah, I did it too. I had some realized gains of about 40 to 45,000 and in my one account, in our Chaos Crew account. So I decided to go ahead and take some of that off the table too, especially because I had call positions that were probably going to render worthless anyway. So I figured I might as well just take those off the table. It's going to do 2 things. It's just going to get it off the books for one, going to rip off that Band-Aid. And then the other thing of it, obviously, is it's not going to hit me as much on taxes when I cut that down a little bit. So felt pretty good about that as well.
Couple questions regarding this. Rob T, does TurboTax calculate write-offs for you? So your broker will calculate what you put into your tax statements.
Yeah.
And so in your tax forms. So TurboTax, yes, we'll put that in there. You'll get it from your broker. You'll get the form from your broker, and then you'll enter that number in. As far as a wash sale, Mark said, I have a wash sale. What do I do? I mean, there's nothing you can do. One, your broker may calculate that, but you should be aware of that. I mean, I don't know how you yet have a wash sale. Well, I guess you could if you recently sold it and bought back in this month. Yeah. I mean, there's really nothing. I don't know if you can do anything. You probably talk to your tax accountant.
Yeah.
Yeah, that's it as far as we got. But guys, yeah. So as far as those that the question as far as wash sale, if you have other stuff you're read in, sell that. I mean, there's really not much. It's not wash sale isn't necessarily a bad thing. It's just you're picking up right where you left off. So It's gonna still look at those gains. Rudy Brown, last day of tax harvest is tomorrow. Correct. Yes. Before the market closes. I guess you do extended hours.
Yeah, I was going to say, and the market is open all day tomorrow. So no half days on New Year's Eve. And they leave it open for that reason. So people can have time to, get their last minute sales in or whatever they need to do. They get taken care of on the last day of the year.
Yeah. So this is just like, guys, this is if you're showing gains, but you have red trades, I'm not sure why you wouldn't do this. Maybe there's an argument, but I'm not sure why you do this. You're going to end up paying capital gains. You might even pay short-term capital gains when you don't really have to. So definitely be aware of it. If you don't do it this year, learn more about it because it should be a part of everybody's strategy.
Yeah, yeah, absolutely.
So let's get into topic of the day, man. What do we got on tap?
Yeah, so the topic of the day is Chinese stocks. I mean, they're going absolutely insane. Alibaba was up 11% last time I checked. We saw NIO going crazy. So a lot of DD, Pinduoduo, all doing really well today. And so it's very interesting to kind of see how this is all transpiring. Let's go ahead and take a look at some of the charts on a lot of these stocks. So right now we have let's pull this up. We got DD on the chart here right now, and you guys can see that even though it's only $5 stock, it's still up 6% on the day today. We look at NIO, and that's up 14%. That was up as much as 20% at one point today, Fat Man Jim. And then we obviously have Baba here. Like I said, it was up around 11%, now sitting up around 10%. So still a really good day for them. Biggest day that we've seen from them since the beginning of the month, and really. It actually looks pretty darn good going into the close here. So honestly, I was really kind of having a hard time finding out exactly why this was making the move, other than the fact that maybe some of the Chinese, whatever the Chinese government was doing, maybe easing up on some of the regulations or what have you. But yeah, this is actually really interesting to kind of see how all the Chinese stocks were doing extremely well today.
Well, I thought it was pretty clear across the board and all the news outlets that they were. I didn't think it was that complicated on why it was.
I tried to look up. I mean, maybe I just couldn't find the right article, but I was listening around. I couldn't figure it out.
So I know our chaos crew will pull it up. Most of them had. I can't pull it up right now, but sorry, you know what? I'll just look at it because TD Ameritrade, pretty much every Chinese stock had the same exact article on it. But it's just surrounding regulation around Chinese stocks in general and the overall. The Chinese government is alluding to the fact that they are considering economic catalysts for the market. So there isn't anything concrete, but it's more of, hey, it looks like the Chinese government may be looking to fuel the economy. And I think that general excitement brought it in, brought the stocks up in general. Here, I have this right now. It was kind of vague as far as they didn't say exactly how they were going to do it, but that is hands down. I thought it was pretty clear that was what the excitement was over the stocks.
Well, I guess that's what I kind of meant. I couldn't find a concrete, actual, real reason as to why the move was being made, especially for something like NIO that's now up, 14 and was up at 20% at one point. So, that's kind of been the catalyst for these Chinese stocks for a year. It's all surrounding around the Chinese government. So it's not a surprise to see the move that's made today. I guess my big question for you guys is this the move? Is this finally going to be something that we can, hang our hats on? Is it going to make you want to buy these Chinese stocks? Is it going to make you want to go buy Alibaba and feel comfortable owning it, or NIO for that matter? And you can put DD and Pinduoduo in that conversation as well. Is it going to be something that really motivates you to say, you know what, I think now's the time. Now's the time to get into Alibaba because it's down so much. It's down from $319 highs, sitting at 123. So obviously did really poor. And this is actually only a little over a year ago. This was at 319. This is October of 2020. So we're talking, 11, 12 months that this is at $319. And here we are at 123, up 10% on the day. It was as low as 108, man. So is this the time? Do you feel comfortable maybe holding on to anything Chinese related? Does Baba buy for you right now?
Yeah. So as far as the specific PR, Chinese stocks are trading higher. The Chinese government vowed to focus on consumption recovery and reduce income tax rates, which hopefully could have an impact economically. My feelings towards Chinese stocks is like, I think that, like, if I'm looking at something objectively, there's risk in every investment we make. And so I think people are just going to hammer Chinese stocks. And I'm not saying that it's not unwarranted, because the Chinese government is certainly a huge part of this problem. But I think that when you think about his history and when you think about the future and where China wants to go, and how other countries play a role in their economy, I think cooler heads will have to prevail. And I just can't see a world in which Chinese, like, Baba delists. I just can't see that. I don't see a world where, like, China says, hey, Starbucks, Apple, Tesla, you got to go out. By all accounts, actually, Tesla and Chinese government apparently have a really good relationship.
Yeah.
And so I'm not saying that can't change. I'm not saying China can't do some dumb stuff. Right. But I've got to believe that, like, money makes the world go round. And at some point, a company like Baba is going to be just fine. Now, is this a catalyst? For me, I don't know if it is. I would prefer to, like, hear a little bit. I think eventually this will be the catalyst. But I don't think that it's just a straight line up. I think that people are going to look for opportunities to, like, not profit take, but, like, sort of sell off some of their position. And so I don't see people just loading the boat back in. But I do think that the benefit of Chinese stocks is they've fallen so much, you can just wait. Like, even if you miss 10% move, you can wait and you can see the confirmation. And for Baba, there's got to be a trend change. And this may be it, but this may not. We could see a big red day tomorrow. We could see a sell-off tomorrow of people just trying to get out. Oh, it bounced 10%. Let me get out.
Right.
So I'm not jumping in right away, but it's certainly worth now putting on the watch list and keeping an eye on, like, okay, what happens specifically with the Chinese government?
Yeah, I agree. I think for me, it's not enough for me to trust them. It's not that I don't trust the companies, because Alibaba is a great company, and obviously they deliver and they continue to grow and do really well fundamentally. So the fundamentals are there. They're really good.
Yeah.
It's just this overhang of the Chinese government that it makes it hard to invest in. So something like this, maybe it's good for a short-term swing or something like that. It could be a tradable event. But as far as investing in these stocks, I still think that they have a long way to go before I could actually trust them with my money long-term.
Don Franz says, someone from my group thinks China stocks are a theme for 2022. Talk about a bold prediction. I'll be honest, I don't think that's a crazy prediction. I think that's a fair prediction. The problem is it's uncertain. So only a couple things have to happen and it could go one way. Only a couple things have to happen and it can go the other way. Yeah. But, like, it's the worst case scenario is a delisting. If you don't believe that's possible, I think it's actually I'd feel more confident in that call than, like, a lot of these stocks that are juiced up 52-week highs. Like, Can they get another 100% run? I think it's like Baba up 30% next year, 40% next year wouldn't be that big of a surprise. It's just hard to say when that move starts.
Right. Yeah, I agree. I don't think that there's going to be, it wouldn't surprise me, right, if Chinese stocks were the theme next year. Which I guess, brings me to my next question, and then we can kind of shift away from that. But what is going to be the theme for you next year? And it doesn't have to be a bold prediction, but what do you think is going to be the sector that, gets hot next year going into 2022?
I mean, we've talked about banking. I think banking's like the safe bet and the obvious bet, and I like that. I think that I was reading an article today that I really liked, and it was talking about Walmart. And what did they call it? It was on CNBC. It was a one-click pickup. Basically, it was a curbside pickup. So it's like the e-commerce, but, like, picking it up from the store, and how that's, like, the new way people are going to do things, and how Walmart's dominating that space. I think, like, that model, it's kind of like the hybrid e-commerce in store. Yeah. I think that's where we see a lot of growth and a lot of opportunity.
Mhm.
But you know, you could what I'm interested in is, I don't know if this is next year, but like, when does cannabis come back on the table? That's kind of what's on my mind. It's kind of fell off the map.
Yeah.
When does that come back on the table as well? So banking for sure. E-commerce, I think, continues to stay a topic of conversation. And then what's that one that we aren't talking about? Could be cannabis. Maybe we'll see. What about
Yeah.
you?
Yeah, I mean, I think that those are definitely um, some reasonable areas that I think could definitely move. I love the financials. I think it's going to be healthcare this year. I think healthcare is going to be a big one. Obviously, we've talked about energy and the industrials that we feel confident on, but if there's one area that I think that doesn't get talked about enough, that I think actually does make the move next year, that could be a leading sector, would be healthcare. I mean, we think about, how COVID has still kind of taken over uh, the world, so to speak, and really has prevented people from going and getting regular checkups, from doing elective surgeries, and we've seen some of that pick up this year. But I think it really starts to come back next year, especially, and unfortunately, if those people who were supposed to get screened didn't, and then all of a sudden end up with cancer or what have you. It's a sad thing to think about, but it, of course, from a business perspective, brings in a lot of revenue for health insurance companies and really the drug companies as well. I think anything revolving around healthcare is probably going to do really good.
Yeah, I can see that for sure. Don Franz says Walmart delivers groceries every week, and it's amazing. Um,
Yeah,
yeah.
Instacart,
Uh,
awesome.
Oliver Thorpe asks, "What do you still think about Big C? Too risky now? As their spec growth?" Um, you know, I think Big C. I think spec growth is similar to Chinese stocks. Like, it'll come back, but it's an almost impossible task to say
Yeah,
when.
right.
Like, to determine when. Um, I, you know, for me, personal trading theme next year, at least in the beginning of the year, is we've talked about value, but like dividend. So we've
Yeah,
been working, on making tweaks to our dividend bot. Really excited about the changes. We were looking at the performance of this year, which was really good. What do we say? It was like 26% or something like that
yeah,
before dividend yield, just on growth. Well, you know, let's say it even does 20 this year, like depending on when you got in. Um, I think it has I think dividend value, stuff like that. I think they have monster year next year. I think they're set up to do that.
yeah.
So value and specifically dividend yields, I think there's certainly something to keep an eye on as well. So like tech spec, going back to that, they're going to be fine. Palantir should be fine. Big C should be fine. But I think at least the first half of the year is probably still going to be tough.
Yeah. Yeah, I agree. I mean, a lot of that has to do with the taper. We've talked about that a little bit as far as a potential volatility due to the ending of the taper, and then talks that'll probably directly go into talking about interest rates and that sort of thing and how that's going to impact the markets overall. I actually think that that's where people will go kind of to live if they're worried about volatility revolving around um, inflation and the taper and stuff like that. I think that's a safe place to be, is in dividend or value stocks, because they're not going to be as volatile as some of the other higher flying tech stocks and high multiple stocks like that. We've talked about that a lot, but I think it's worth repeating. Just that might be a good place to kind of park your money, or at least some of it, if we're going to be experiencing some volatility, which I agree, I think we will.
Savvy Money says, Walmart drone delivery soon. That would be nice. I mean, the value stocks that have been beaten down, I talked about Disney. Walmart's still not back up to where it should be.
Yeah,
PayPal, Visa to a certain extent. Those companies are going to be just fine. And they look like they're on special right now. And this is what we've kind of like made our bread and butter of these type of stocks. Um, I see those. We look at all these stocks that are at 52-week highs, and I'm not opposed to that. but like Disney at 160 feels really, really good.
Yeah. Yeah.
And I know it's not going anywhere. Maybe
Right.
it won't run 100%, but there's so much meat on the bone. It's like, this is a really good one. PayPal feels really good.
Yeah, and I mean these are not a lot of stocks that like are super sexy, right? And I think that's
Yeah.
going to be key for a lot of people is that they're used to buying some of the crazy stuff that goes parabolic, like Virgin Galactics. I keep thinking about stuff that moved this year, GameStop and AMC's and all that. I don't know if we see that. I think we see your grandma and grandpa stocks outperforming some of the crazy moves that we saw this year. So I think it's gonna be interesting just to kind of see how it all shakes out. But that's going to be probably the theme, and it may not be attractive to a lot of people who are used to trading some of the stuff that's gone nuts. But at the end of the day, it's going to make money, and it's going to be a little bit safer than some of the crazy volatile stuff that we've seen go nuts.
Yeah, absolutely. Speaking of unsexy, I wanted to bring this to the table. So we broke down all the stocks that we had in the dividend bot,
Yeah,
such as Maine, O, Verizon, Goldman Sachs, AbbVie, J&J, XOM, whatever. The highest performing stock for 2021 will be Costco in our dividend bot. And the returns for the year, Brad, were 50%. Then that doesn't include the yield. That doesn't include any yield that you get from the dividend.
Yeah.
And so that's another stock. You don't see us talking about like, oh, Costco had a 10%, 20% move, whatever. But it's just a classic. It just chips away, chips away. And wouldn't you know, this thing had over a 50% move when you calculate in dividends. It was our number one. And so that kind of speaks to sometimes it's the unsexy ones that actually end up being the best performers.
Yeah, and then the top five in that was what? ExxonMobil, which nobody talks about, which was also nearly another 50% mover. And one that comes
Goldman
close to that
Sachs.
is Goldman Sachs, right? Yeah. So like those top three that had 50% gains this year were probably, I would say, among the least talked about stocks across the board, across YouTube and what have you. So just monster years out of those, and nobody's talking about it.
Yeah, and again, I think you remember as people, you always talk about the market being a forward-looking vessel, and I think it's a balance of looking what's moving now, but also thinking about where the tension's going to be.
Mm-hmm.
And if you go back to this time last year, ExxonMobil was a very bold call to put into the dividend bot, and even to a certain extent, like a Goldman Sachs, maybe not Costco, but ExxonMobil, people were like really shitting on it, and it turns out to be, pretty much. Actually, when you factor in dividends, it probably ended up being a little bit better than Costco.
Yeah, I agree.
So it was just interesting to look at those and look at that breakdown, and just exciting to see the performance on that.
I just wanted to shout out Lexa for the donate $4.99. Thanks so much for the support. We certainly appreciate it, Lexa. Thanks for the donate.
Somebody asked about split. Which one do you think? Which Bakatoon? Which split next? What splits next year? CMG or Amazon?
Oh, well, I got my eyes on Amazon. I think Amazon should, whether or not they will, it kind of remains to be seen. But I think Amazon should be the one that splits. I think there's a case you can make for Chipotle as well, but Amazon's the one that I feel like really has to do it, and that's the one that'll probably make a monster move. I mean, that was one of the underperforming FANG stocks this year. I mean, it was good for 1.6% gains on the year, somewhere around there. And it's had some volatile wild moves all year long, but that's where it settled out here at the end of 2021. So I think in order for that to really start to make the next move up, it's got to split. It's got to be attractive to everybody, and nobody wants to buy a $3,000 stock. Yeah,
we should do a video on 10 stocks we think could split next year, because there's a lot
like that
sort of in that boat. Google's in that boat, or Alphabet's in that boat. You could make the argument, something like a AutoZone. You could make the argument, even other big tech stuff. You could potentially make an argument for even like a 2-for-1 split. But Alphabet seems like also pretty much up there in that conversation. When you look at a CMG, what I will say is if you're a CEO, why would you want to split, right? And
Yeah.
if you're the board voting on it, why would you want to split? Amazon has a strong case. I think CMG does too, which is volume. There's not a lot of volume in CMG, and I do think that's because of the price, the stock price. So if you
Right.
think if you're seeing growth, and if you want to be accessible to more shareholders, this is a good way to do it. The one fear you have is you don't want somebody who's just going to get in, get out, like in the first sign of like whatever sort of adversity. But when you're, $3,500 like Amazon is, that is a lot per share. And a lot of people don't want to do fractional shares. So
Right.
I think CMG definitely makes sense. Amazon makes sense, but there's a few on that board that could definitely, you could make the argument, could split.
Yeah. Yeah, I agree. Alexander Kim asks, isn't CMG an inflation play? I would make the argument that just about any equity is an inflation play. Any equity that has pricing power, and obviously Chipotle has that ability to do that. They can raise their prices a very minimal amount. It'll help them out on their bottom line, and nobody will really notice. And Apple obviously is a good one that can do that. Netflix, all they have to do is raise their subscriptions by $1, and it's going to raise their top line by what, $190 million. So I think that's and that's $190 million a month that they could raise revenue. All they have to do is just raise subscriptions $1. So yeah, anything that has pricing power like that, I think is a good inflation play. But honestly, just being in stocks is the name of the game to try to keep your cash from losing its value. Good question here from Juan Pablo. It says, any thoughts for Apple? Speaking of Apple, is a correction imminent since the stock couldn't surpass the 181. So 183, I think, in some change is what would make this a $3 trillion stock. And so I don't think so. I think that Apple actually does really good next year. I think it'll be another outperforming kind of year. Now, granted, as we saw this year, Apple didn't really start to outperform the S&P 500 until the last 6 weeks of the year. I mean, really leading up to that, it was only up around 9% on the year, which isn't bad for most stocks. If you have a 9% year, it's average. It's not really that crazy. But then, Apple really turned it on and started to go nuts. And I think it ended the year up, around 34%, if I'm not mistaken. Fat Man's doing somewhere around there. So ended up crushing the S&P 500. So I think that Apple still does that, even if there is some volatility with the stock next year.
Yeah, Apple is 36% as it sits now.
It's crazy.
Yeah, we'll see. I mean, it always has, these profit-taking moments. But as far as things on the horizon, it looks good. It looks really good. Don says, I just want to say what's up to Michael Hanna. What's going on, man? Thanks for joining. I wonder if Amazon loses volume if they did the split. It's number 2 to Tesla and above all others. Number 2 in what? Volume? Like, is this options volume?
Probably because it's very liquid on that side of things. So it makes it easy to trade options, which is why Don from the Don Front Show loves it, because of the liquidity that provides and the volatility, I'm sure.
Michael Hanna says, Apple going to be corrected hard. I'm waiting for 20 dip from all-time highs. We'll see.
I don't know. I mean, have we seen a 20% correction from Apple in a minute?
That's a good question. When was the last time? I'll pull up. A 20% correction. So from September to October, it was 11%. I mean, I guess you could probably say, what's this one? January to March, like the end of January to March was 18%. That's probably the closest we're going to get.
Yeah. Yeah. So I don't know about 20%. I mean, it's possible, of course, but I don't know how likely that actually is. The most that I could see is correcting now is maybe coming back down to 167, but that's not even close to a 10% correction. So I'm not sure.
September 1st to September 24th was right below, a hair below 20%, 19 and some change.
Okay.
I mean, it looks like you can certainly 15% you can certainly say has happened a couple times recently. So, and that was over the course of like 4 to 6 weeks. So yeah, I mean, it could happen, but we'll see.
Wen actually brings up an interesting point. Says China gave Tesla so much to grow, but no doubt they will beat Tesla down if Tesla outperforms the mainland companies. But Tesla's the highest performing EV company in China right now. I don't think there's a EV company that sells more cars than Tesla does. So I'm not sure about that either. Wen, correct me if I'm wrong. Put it in the chat if I'm wrong about that. But I feel like Tesla already is crushing the competition out there.
Yeah. By all accounts, like I said, they have a good relationship.
Yeah, they do.
Maltagoya said, "What if Berkshire Hathaway Class A does a 427,000 to 1 split? Then we can do a community buy." Yeah, that would be great. I know that's kind of a tongue in cheek. Just so everybody's aware, Warren Buffett is adamantly against stock split. So you will never see a Berkshire Hathaway as long as he's chair that happen. And I imagine even after he's long gone, I think they'll probably just keep that philosophy.
Yeah.
But yes, that would be crazy if they did a 427,000, 400,000 to 1 split.
That would be insane. That would be, any split from them would be crazy.
Yeah. Jeff, for financial sector options or share is preferable. I won't say which one's preferable. I think it just really depends on you, your risk tolerance, your time horizon, me personally, and just the leverage you have. Me personally, I'll be looking for leaps. However, really there's some factors into that.
Yeah, for sure. I was trying to find where Elon had said this, but I saw somebody had mentioned it in the chat. But did you hear about Elon saying that he thought that we could see some sort of recession next year?
I did not see that. No.
Yeah, he tweeted it out in some sort of reply. I can't find it, but saw somebody had mentioned it in here about him making those comments. I think that we should probably take that with a grain of salt. I mean, at the end of the day, he still did mention that he's not really an economist. So he just basically bases this off of a gut feeling is what he says. And then said certainly before 2023. I'm not sure really I'm down with that. A recession? I don't think so. Not in the very early stages of an expansion, which is really what we're in the middle of. And we were still in the early innings of this expansion and people getting back to work and doing things. So I don't think that actually happens. Thought it was interesting that Elon did make those comments.
Say to no libtards. Any update on Clover? We can listen to Mega Talk anywhere, Mega Cap Talk anywhere. I mean, we'll give you the update when it happens. There's not necessarily anything specifically to update on it. I think that, I mean, I'm still in Clover from a long-term perspective. I think there's a lot of factors as to I wouldn't necessarily put it on the watch list because we haven't seen anything that we can really get behind right now. And there's just an unfortunate set of circumstances that hit Clover. But what I will say is it's kind of similar to Baba is when it reverses trend, it shows crazy volatility.
Yeah.
And I think the company's doing the right things. They did a really good response to the criticism because they've been kind of silenced. They did a 12-point response on the criticisms that people have had regarding their company and their silence and what they're doing. And I thought it was awesome. They've done their PR is on point. I'm backing it because they haven't shied away from stuff, but they have some headwinds surrounding COVID costs. They're going to be challenged because they also are not profitable yet. So next year is going to be an environment that could be challenging for them. They've talked about their debt and why they brought on debt. But that's been a knock against them as well. However, like Baba, there's so much room to grow that you can wait for a move. And if it moves 10, 15%, you still have so much more meat on the bone that you can be patient with this stock and you can allow yourself to get in there just like Drive Shack, just like Penn. You got to wait for the confirmation on that. But Clover has shown a propensity that it can get picked up by the Wall Street bet community. It can move. And if you give this thing a catalyst, a legitimate catalyst, it could crush it.
Share structure is very small too, so it's not going to take a whole lot of money to move this thing once the right amount of money comes in. All good stuff, man. Any last remarks before we head into the new year?
Well, real quick, just want to talk about the Chamath stocks. Will IPOD, IPOF run out of time to find an acquisition soon? I can't remember offhand when.
Your mark is in March.
Is January.
Oh, it's January. Somewhere in the first quarter.
No, sorry, you're right. Because the reverse merger, we were talking about it in January, but the reverse merger vote had not happened yet.
Yeah.
But I'm trying to think of when IPOD, IPOF came out, which was probably around the December time. You guys can tell me of 2020. 18 months is typically when they like to get the deal done, but they can have up to 24 months.
Yeah.
So they have the large part of next year for it to happen. And I know a lot of people have been like really frustrated with it, but I would be terribly optimistic. I would be terribly optimistic if I was in IPOD, IPOF, which I am, because it has just sat like you just got to be patient. That's it.
Yeah.
And so waiting for that deal. And what I'll say when that deal does happen, I would be really prepared with my exit strategy. I don't think this is this thing that just runs to the moon. I think it has a move, but I think there's going to be some people holding the bag because profits are going to be taken. So be prepared with your exit strategy. I think that's more important. So that's what I got to say as far as general thoughts, last words. It's been a great year. I'm even more excited about next year. I'm excited about what's to come from the Chaos, for the Chaos crew, and continue to see the growth. It's been awesome to see the growth within our community. People develop. 2022 this year felt so much better than last year, and I think we're going to continue seeing the same thing next year. So kudos to you guys for supporting us.
Me too, man. I'm super excited about 2022. And, you know, I'm not going to sit here and be like, oh, this is our year and do all that cliche stuff. But I think it's definitely going to be a huge learning experience, I think, for a lot of people that maybe haven't been through the markets in cycles and stuff like that. So I think it's going to be a huge learning year for a lot of folks that's going to be experiencing this type of cycle. So I'm really excited for that and just kind of like all the content that we can build on those types of topics. And I think that we're still going to have a green year next year. I think that, you know, we're going to experience some challenges just like we did this year. But COVID, I'm hopeful that is finally going to be behind us in 2022. And we can get on with building the economy and having this great expansion that I hope that we do end up having. Yeah,
absolutely. And there will certainly be more options in 2022. That's for damn sure, people.
Yep. That's going to do it for us, guys. We'll see you back in 2022 for our very first Stock Watch Sunday of the year. That'll be at 7:00 p.m. Eastern time. We hope to see you guys there. We're going to give you the stocks that we think are going to ring in the new year for that week. And that's going to do it for me. Fat Man Zoom, B. Smith. I don't know what he's going to start playing the drums.
Yeah. Go ahead. Sign us out.
That's going to do it for us, guys. Thanks for tuning in. As always, we'll see you all before the bell. B. Smith, Fat Man Zoom. We're out.
Bye.